Welcome, everyone, to this webinar, how can fast-paced digitization be sustainable in the financial sector, exploring good practices to promote decent work. My name is Craig Churchill. I head up the ILO Social Finance Program. And we're excited today to have this webinar where we're looking at how digitization is affecting the working environment in financial institutions. A few years ago, the ILO launched an inquiry into the future of work and looked at 3 or 4 major sort of mega trends. One thinking about climate change, one changes in demographics, another on globalization, and the last one on technologies. And looking at all 4 of these, how the world of work was going to change because of these mega trends. And this particular session is looking at one of those in particular, so the technology piece, and focusing on one sector in particular, the financial sector. I come at the financial sector from the financial inclusion space, so looking at how new technologies are enabling access to financial services. And from that perspective, this is a super exciting time in the financial sector. From financial inclusion, it's the technologies in terms of digital finance, mobile money, and so forth are creating opportunities for financial institutions to reach new markets, underserved market segments, to be able to do so much more cost effectively, much more efficiently, and it is definitely expanding dramatically how the financial sector is engaging with its customers. There are some downsides to it, certainly. There's downsides in terms of potential for bias, and if we're thinking about artificial intelligence, for example, or certainly big concerns related to over-indebtedness, if people are accessing finance and don't have the capacity to repay, for example. But in general, the angle or the view on this is mostly quite positive and exciting, with concerns on the side to make sure that we're looking at the potential negative impacts. And I guess another negative impact would be, while it's expanding access to markets significantly, there's still underserved segments that don't have access to technologies, that can't use the technologies effectively. But that's all coming at this from the financial inclusion perspective. And I think what is exciting about this event is it's not really thinking about financial inclusion necessarily, but it's really thinking about how technologies are impacting the people who are working in the financial sector. And so we've joined together with the sector department of the ILO that is engaging with the financial sector. They had a meeting last year looking at how technology, or how the financial sector is evolving based on the technological developments, and thinking about what implications there are for people working in the financial sector. And this is a follow-up to that meeting, to be able to go into a bit more detail, thinking about how to harness digitization while at the same time promoting decent work in the financial sector. And so I'm quite excited about the opportunity to discuss that in more detail, and I would like to hand over the moderation to my colleague Margherita Licata, who will take it from here. Margaret, to you.
Thank you very much, Greg, and for introducing the topic, but also to really elaborate on this twin dimension, the financial inclusion, but also what is the implication in terms of decent work. Yes, the conclusions of the meeting in January 2022 really called for this kind of action from the government, but also from employers' organizations and from the trade unions, and actually from the enterprise that work in the financial space, to create an environment that is conducive not only to business outcome, not only to innovation, but also to decent work. So let's start. We are going to have first a presentation on the research finding, we collaborated. We had a very good collaboration with FinValue advisors, and the research, Bhavana will explain it, but the research is a combination of a global literature review and naturally a survey in 3 regions. And then we are going to have a panel discussion where the speakers will have the opportunity to react to the first presenter. Let me first introduce Bhavana, and maybe let me anticipate that if you have any questions, please use the question and answer function. Don't use the chat because we are going to look at really at the question and answer function. So let me start by introducing Bhavana Srivastava. Bhavana leads the FinValue advisor. She has a very strong team behind her. They are all part of this webinar. She's a seasoned banker and she has over 25 years of experience in the development finance space. She has a background in international development, in finance, in policy and regulation, but also strategic planning. And let me say that she's also very passionate about channeling finance for socioeconomic development. Through the leadership that she really has within FinValue, the team work with a number of actors, from financial regulators to financial service provider, advocacy organization, on a number of issues: gender, climate finance, digital finance, finance for micro, small and medium enterprises. So without further ado, I will give the floor to Bhavana to present the finding of this research. Bhavana, the floor is yours.
Thank you, Margarita. Thank you so much. And a very warm welcome to all the participants. I must express my thanks to you for your interest in the webinar. And we really look forward to having a very insightful discussion today. So Craig and Margarita have already sort of introduced or set the context in which the study was undertaken, but I'll just give you a little bit more detail about the study. This study basically designed to explore how digitalization in financial sector is impacting the environment of work on the one hand, and how it is leading to change in the business outcomes on the other. And within this broad context, we basically looked at 3 components that define decent work agenda. First, we looked at the employability, sustainability, and diversity aspect. The second area that we explored was around conditions of work, employee well-being, and data protection. And finally, as I said, we also looked at business outcomes and how the organizations are moving towards a just transition. So with this context, we basically centered our study on 3 categories of stakeholders. First, we looked at the financial service providers because they are the core of what we are trying to study. We also looked at the trade unions and the role that they are playing in this whole digitalization.
Bhavana, I think that you are muted, or there is a problem in the communication. Let's wait 1 second. Maybe I can ask Bhavana to disconnect and maybe connect again. Sorry for this. Yes.
I'm
Okay.
extremely sorry.
No. Okay.
So internet was working all right, but then suddenly it just went off. Sorry, Margarita, I'm not sure till where did you hear me? Should I repeat the whole from where it started?
You were talking about a bit the inclusion of the union, the employees organization in the research. Yes, please go ahead.
Okay, all right. So yes, thank you. So as I was saying, across these three categories of stakeholders, we basically selected all typologies in terms of the size, the scale, the countries that they come from, the type of institutions they represented. So we covered banks, we included MFIs, fintechs, insurance companies, and others. So this is in terms of the selection of the stakeholders that we covered, but at the same time, in terms of the methodology, we employed both secondary research and primary research techniques. At first, we tried to study what is the current state of practice. We looked at some of the documented best practices that exist, which actually informed our understanding of how the sector is responding to the digitalization is happening. And then we followed it up with primary research, which basically had two parts. We had a survey, which was conducted across three regions of Asia, Pacific, Africa, and Latin America. And then we followed it up with in-depth interviews with select stakeholders. In doing the selection of countries across the three regions, we selected about 5 to 10 countries from each region, and we sent out the surveys to the different categories of stakeholders. We covered around 11 financial institutions of all types, as I said. There were 12 employers organizations that we covered in the survey and about 28 trade unions. So this
I think we are experiencing again some problem with the sound, Bhavana. I don't know if some of your team can maybe help with the connection. And here again, Bhavana, please, you have the floor. Maybe you can switch off your video. Maybe that can help. Sorry, colleagues, and whoever is online, we are just waiting for Bhavana to reestablish her connection, and maybe if I can ask my colleague Valerie to contact maybe our team to see if they could help. Okay, Bhavana, you are already online now. Do you maybe want to switch off your video and then and see if maybe that is better?
Yeah, I'm doing that.
Wonderful.
Yeah.
Thanks. You have the floor, Bhavana.
Yeah, sorry. Juice, can we move to the next slide, please? Great. So to begin with, we basically looked at how financial institutions are approaching digitalization and what kind of an impact digitalization is having on these institutions. What our findings we discovered was that at an overall level, there definitely is a positive impact on the business outcomes that FSPs are reporting. About 82% of the institutions that we surveyed, they said that they are seeing improved revenue streams. Some of them even reported benefits in form of wider customer base, better experience of customers, and of course, greater agility in doing business. Quite expectedly, we also found FSPs saying that digitalization has resulted in an increase in their operational costs, but in the medium to long run, these costs are being offset by the other benefits that are accruing to them. So overall, there was definitely a positive sort of impact of digitalization on the businesses that these financial institutions are doing, but it also has its own set of challenges. And about half of them feel that, they do not have the requisite technical know-how internally within the institutions, as a result of which they sometimes feel challenged to keep abreast with new technologies, to prepare their workforce in alignment with emerging technologies. About a third of them also mentioned that they are grappling with the entire change management that comes along with the digitalization, and this is something that we see widely across the sector. So broadly, this is in terms of the impact. Can we move to the next slide, please? Yeah. So as I said, the first of the three components that we looked at was on employability, diversity, and sustainability. So I'll just share a few findings that we have on these aspects. Next slide, please. Yeah. So, I mean, institutions who are on the journey of digital transformation, they have to rely very heavily on digital technology teams. Because digital transformation is a complex process, and therefore there is a need to have highly specialized team within the organization to take up this change. As a result of which, there is a greater need now being felt for very specialized skill sets to be incorporated within the institutions. What we found from the survey was that financial institutions do feel challenged in getting the right type of specialized teams within the organization for various reasons. And therefore, skilling is seen to be one of the major challenges or the concerns that institutions are facing. The key skills that they have identified, which are like necessarily for them to grow and take up digitalization in a big way, are the skills around cybersecurity, skills around data analytics, artificial intelligence, and all of these new age technologies that are needed to run a digitalized led business. So in terms of, we also then looked at how FSPs are, how they are coping up with all of these challenges. So what we find was that the FSPs on their part have started to develop the skilling strategies within the organization. Some of them have started to implement learning and development programs for their employees. We also found that there are institutions who have instituted policies within the organization that enable employees to take courses around these new age subject matters, using various courses that are available on EdTech platforms. There are some institutions who have also started providing financing support to employees to pursue paid courses in these areas. In addition to that, they are also embracing themselves internally to develop internal training courses, largely for reskilling the employees who are moving from more manual-based roles to more technology-enabled roles, or rather, say to reskill the employees whose roles are moving into more automated roles. So for that point of view, the FSPs have started to incorporate and design training courses oriented around that. Next, please. Okay, so with this background around skilling, as I said, while financial institutions are now increasingly taking steps to bridge the skill gap, there are still a large number of constraints that they face. And one of the most sort of constraint that came out very prominently was that the limited time and the financial resources that are needed to undergo this change, or let's say reskill the employees or make them more upskilled in the different areas, or even recruit talent in these areas. So that's where some of the major constraints are being faced by FSPs. In this context, we feel that there is a greater role for employers' organizations and TUs to come in and help address some of these barriers. In our exploration, we found that the employers' organizations have been engaging both with the governments in designing the skilling policies on the one hand, and also engaging with the financial institutions in developing the learning programs for the employees. But as far as trade unions are concerned, we still feel that there exist some gaps. In our survey, we found about 43% of the trade unions that we surveyed said that as of now, there is no involvement from their side on any of these initiatives. And therefore, we believe that given the fact that trade unions represent the interest of the workers, we feel that there is definitely an untapped potential for trade unions to take up some of these activities in collaboration with the other stakeholders. Next slide, please. Okay. On the diversity and sustainability, I'll just first talk a little bit on the diversity. What we found from our survey was that digitalization has actually enabled FSPs to expand their talent pool, to source people from different geographical areas. So from that point of view, that we see a greater amount of diversity within the organization, and therefore they are now able to, meet their targets more meaningfully. We also find that in line with, in many cases, we find that in line with some of the national level mandates that they have, FSPs are now developing their own diversity and inclusion strategies within the organizations. Some of the institutions we found have started to invest in training sessions with employees to educate them about the diversity and inclusion policies of the organization, as well as also to sensitize them on gender issues. So while all of this is a very encouraging trend that we see that has been brought about by digitalization, we actually also sort of flipped the issue, and we tried to understand what roles and what typologies of workers are being most adversely impacted by digitalization. And to know the answer to this question, we actually asked the trade unions on what they have to say on this aspect. And what we found from the survey was that trade unions reported that women as a group are more likely to be disproportionately impacted due to digital transformation. One of the reasons that we see is probably because usually women find it more difficult to transition to technology related roles from the conventional roles that they have been doing within the organizations. Probably that could also be one of the reasons why they are more than disproportionately impacted. The other group that we see getting impacted is the people, the older persons, the slightly higher age group people within the organization who find it difficult to adapt to new technology dependent roles. Some of it may be got to do with their own abilities to do it, and some of it is also got to do with the resistance that they have to these changes being brought about. In terms of the sustainability aspect, we find that in line with the increasing demand for ESG frameworks, more than half of the FSPs have some kind of a sustainability policy in place. And in terms of the initiatives that are most prominently being undertaken by these FSPs towards sustainability is to adopt processes that are more paperless, because they see it as one of their ways of reducing carbon footprint. But apart from all of these paperless processes and other things, it was also encouraging to note that there are FSPs who are taking steps to promote awareness among customers about sustainable lifestyles. These are some of the non-financial services that they undertake. They are doing this by informing the customers about carbon footprint through carbon footprint trackers. They have instituted virtual communication systems to engage with the customers more actively and in a much more prompt and an effective manner. So these are some of the best practices that we see being adapted by different financial institutions. However, I would not say that it is still a sector-wide trend. Most of these initiatives are still limited to large-scale financial institutions who have adequate resources at their disposal. And therefore, we see some of these practices being done by them and not so much by the smaller or mid-sized institutions. Next slide, please. Okay, so we now move to our findings around work conditions and employee well-being. Next. Okay, so so on the conditions of work, our survey found that about 45% of the financial institutions that we looked at, they have allowed flexible working models. A large part of it is also because of the pandemic that we've all seen in the last 2-3 years, and which has led to these institutions to allow to go for more flexible work models. But as far as financial institutions are concerned, we find that these flexible work models are only applicable to specific roles. Shifting in a major way to flexible working arrangements is still it's still a difficult issue for FSPs, especially those which are operating in a more physical presence kind of a structure. The institutions, fintechs, or other technology-enabled institutions or digital-first institutions are more agile in that way because they do not have the physical presence, and therefore the flexible working models in these institutions are much more amenable. But for FSPs, which are more in the physical mode, it has been, the transition is happening, but it is still slow and gradual. We also see that FSPs are now sort of creating policies that support them in flexible working arrangements. Some of the ways they have done this is by providing the employees with laptops, devices, mobile and internet connection, giving them access to log into the organization system while being at home. So these are some of the ways in which flexible work models are being adapted. We also see some other encouraging trends like leave policies being given to employees, especially those who are in care duties, increased support for mental health and related issues. So, so all of this, we would say that is leading to an improved work conditions in the financial sector as a result of digitalization. But then, yes, there are some other concerns also. One of the major concerns that we saw from the survey was that while all of this is being put in place, we did not see it being translated into provisions in their employment contracts. What therefore it means is that these initiatives are being taken more on a case-by-case basis. It is yet to be institutionalized as a practice across institutions or across the sector. So this is something, an area that probably needs to be focused on by different stakeholders as we go along. Next slide. So in terms of employee well-being, we find that digitalization has had both positive and negative impacts. The findings show that flexible working options have reduced the time the employees spent in transit. It has resulted in increased productive hours. So there are some kind of positive impacts that we're seeing as a result of digitalization, which is leading to better employee well-being. But on the flip side of it, there are still a number of risks that are associated with digitalization. One of the most serious risks that came out on the survey was the need or the expectation to be available at all times. While we are working at home, the expectation to remain connected and be available for work duties is something, an area of concern. And as a result of which, there are increasing number of FSPs which are reporting issues around employee burnout and fatigue. And therefore, these are some of the concerns that require attention going forward. The brighter side of the picture is that there is a greater realization on the part of FSPs to focus on OSH. And as you see on the slide, we found that about 64% of those that we spoke to already have some kind of an occupational safety and health policy in place. So, so while there is a recognition or the importance of having these things in place, it's also important to make it work on a more holistic and a rounded manner. Given that all of these issues are directly concerned with workers, we find that there is a greater role that the trade unions can play in this. We find from a survey that they are already using, trade unions are already using digital and offline tools by conducting interviews, surveys, with the employees, with the member institutions, to basically stay updated about these issues so that they can then take up adequately with the management of the organizations. But as I said, these are some issues which need to be taken up in a more holistic manner. Next slide, please. So as far as employee data protection is concerned, we looked at it because just as data protection for our customers is important for FSPs to ensure, it's also important for them to ensure the protection of employee data. I mean, there are various ways in which employers collect employee data at different points in time for different purposes. So while it is important to collect all of this information about the employees or the data about the employees from monitoring purposes, assessing their performance and other things, it's also important to safeguard it. And we find that there are some FSPs who have tried to put policies in place that help to safeguard employee data. Some of the ways in which they're doing it is by taking informed consent of employees before collecting their data, and also ensuring there is transparent communication about how the data is being collected, what data is being collected, and how it is being used. So these are some of the steps that we find institutions taking in terms of protecting the employee data. Next. Okay, this is the final slide. So so after we looked at all of these practices, we also looked at how the employers, organizations, and the trade unions, how they are collaborating among themselves, because they represent the interest of two critical parts of an organization. And we find that there is a greater degree of collaboration between the two types of entities, especially when it comes to matters around OSH, around skilling, about workplace issues and other things. But there are still some areas which require attention. What we found was that there are both the sets of institutions talked about limited availability of resources to undertake these activities and their own understanding of digitalization and its implications. Because with digitalization, with technology changing so fast, just like any other organization, the employees' organizations as well as trade unions too have to keep themselves abreast with the technological changes that are happening and the implications thereof on their respective, interest groups. And therefore, these are some of the areas which require, more concerted efforts on the part of both these entities. Consolidation in the workforce and limited avenues for placing the displaced staff are some of the challenges that came out very strongly from the trade unions. This is the matter that they have been grappling with the most, especially as there are fear around job losses and other things. And while all of these efforts are being made by different set of entities, the progress still needs to be sort of speeded up, and there is therefore a need to, a more coherent and a more coordinated way of engagement between the employers' organizations and trade unions, as well as along with the FSPs. So this is broadly the findings of the study. These are very high level findings. As I said, the report is still to be published, so therefore there are more, detailed insights or more nuanced insights as we mention in the report. So till then, this is the final sort of an overview of the findings that we have for you. And with this, I'll stop here and I'll pass on the floor to Margarita. Thank you so much.
Thank you very much, Bhavana, and let me also thank the team Ashraya, Ishita, and Garima that have been working with you on this research. Now, just not to lose the momentum, you heard the presentation. There are a lot of food for thought in terms of some of the key finding around skilling, some initiative taken by financial sector providers, but also what is the role really of employees organization and trade unions. So let me maybe jump into the panel, and we have distinguished speakers from Imbok, India, from Pluang, Indonesia, and from the Employees Association of Germany. I'm going to take the time to introduce each one, and then I'm going to ask a first round of question, and the first round is specific to the organization or to the service provider, and then we are going to ask a general question for the three of them. But let me start by introducing Mr. Kansal, Senior Vice President of the Indian National Bank Officer Congress, Imbok. Mr. Kansal started the union career as an organizing secretary in the bank union in 1975. He had been president of the Punjab Bank Employee Federation, Bathinda City, between 1976 and 1980, and he held the position of regional secretary, circle secretary, vice president, senior vice president in Canara Bank Officers Congress between 1986 and 2013. He served as a general secretary of Imbok, Delhi State from 1990 to 2021. And presently he holds the position of Senior Vice President of Imbok National Team. So, Mr. Kansal, let me maybe start by asking you a question, looking a bit at the research. The research, as you can see, highlighted that this digitalization wave has brought about changes, especially when we look at the organization of the work. And this naturally had an impact on the workforce in terms of flexibility, in terms of remote work, and broadly on working conditions. So please tell us what has your trade union done to negotiate, to develop a working arrangement for your worker, for your members in the financial sector in the context of digitalization. And this naturally can include all the areas that were discussed in the research, and maybe focus on some of the key achievements, but also some of the challenges that you see ahead. Mr. Kansal, you have 5 minutes. I will try to be strict so that we give everybody the opportunity to have a say. The floor is yours.
Thank you, Margareta. Good evening to all the co-panelists and my participants, ladies and gentlemen. Thanks, Margareta, for asking me a very relevant question in today's scenario. It is true, digitalization has brought a sea change in the financial sector, thus helping millions of people to do banking sitting at the comfort of their home. But this is also true when such a big change comes, it brings with it the concerns also, challenges also. To address such concerns and challenges in the public sector banks, we have a regular process of dialogue or joint meetings between unions and bank managements at periodical intervals, wherein agenda is submitted, discussions are held, and solutions found on the issue of workers. Such meetings are held both at bank level and also at industry level. The first major concern of the retrenchment was sorted out through such joint discussions only in mid-80s when technology just entered the banking industry. The unions negotiated an agreement with the managements that no retrenchment will be done. Added to this, increase was done in the wages of all the bank workers by way of one additional increment as a financial incentive in order to motivate them and to make them accept the change in a good taste. This worked well, technology expanded, and banks added new clients and new business. Now, the present day concern is health, safety, and work-life balance for the workers, which is directly linked to shortage of manpower. Unions have been consistently raising this issue and demanding for more recruitment to put a check on the continued sittings in front of screen, long working hours, excessive work pressure, and working on Sundays and holidays. The managements, though earlier were hesitant and had a different view that digitalization will fill the gaps, but now finally they have agreed and process of new recruitment has started, though at a very low pace. This still remains a big challenge for the unions to get the recruitment at a full pace. Regarding another concern of skill upgradation, banks with a reduced staff, short staff, have adopted shortcuts, and hence they have started giving training online. Now the worker has to attend to his routine work in the branch as well as training digitally. Both things can't go side by side. Unions have raised this issue and are insisting for more classroom trainings in place of online to ensure maximum knowledge retention and proper understanding. Managements have accepted this demand positively, but still there is a challenge how this will be implemented with the short staff. On the other hand, unions have also started their own training centers and are imparting training to the workers in its efforts to upgrade their skills. Another concern is persons hired by the banks with contract, that is gig economy. Making use of the digitalization, banks are engaging persons on contract as banking correspondents, consultants, and freelancers. These people don't have the same rights, same pay structure, and also same accountability as regular employees have. Unions have strongly raised their voice, and many times we are giving the agitational calls also. But this issue still remains to be resolved and is a big challenge for the unions. The data protection. This is again the big challenge for the financial institutions also and for the unions also. Data, both of employees and also of the clients. Use of AI is the need of the hour, which has also the risk of compromising with the data protection. Though unions are insisting and managements are also taking steps to ensure data protection, but this also still remains a big challenge. Additionally, unions are guiding its members also to take care of the secrecy of their passwords and also secure their biometrics to ensure that no other person can have access to their systems and data. The other thing is unions have been putting forward pros and cons to management after every new technology is rolled out to ensure that technology does not compromise compliance, which at a later date may put the employees as well as the banks into problem at the hands of the regulator. At the end of the day, I can say unions will continue to press, persuade, and negotiate with the managements to address all the challenges through mutual discussions and also organizational actions if required. Thank you.
Thank you, Mr. Kansal. I like your message at the end. The unions will continue to negotiate. I think social dialogue actually is key to address some of these challenges that you mentioned, from data protection to workers' well-being and the gig economy. But let me now turn to Ms. Claudia Colonas, the co-founder of Pluang Indonesia. Claudia Colonna is co-founder and CEO of Pluang, that is a multi-asset investing platform targeting first-time millennial investors in Indonesia. And before founding Pluang, Claudia has worked for many years. She has over 10 years of experience in the financial services industry. She worked at Celebes Capital, which is a leading venture capital fund that focuses on financial institutions. So Claudia is a strong believer that everyone has an opportunity to grow their wealth. And this is all what actually Pluang is. It's about providing inclusive investment through a diverse range of products in one digital application. So Claudia, you heard the presentation, but also you have been part of the research interview process. And one of the key takeaways of this research is the need for financial sector service providers to address the challenges, but also to capitalize on the opportunity arising from digitalization. And sort of build a vision, build a strategy, invest in human capital. Could you maybe provide us with some insight on how your company has achieved such goals? What was your level of engagement, for example, with employee and with employee representative, if any? And please, you feel free to cover various areas that you heard in the research, from reskilling, upskilling, but also career progression, issues about safety and health, and data protection. Ms. Colonna, the floor is yours.
Yes, thank you so much for having me. I think I'd like to bring a little bit of perspective from a growth stage. So just to give a bit of context, Pluang is a growth stage, Series C stage startup. We're less than 5 years old. And digitalization has benefited us in a lot of ways. But number one, I think primarily, even though we primarily focus on Southeast Asia as a market, we actually have a big workforce, full-time employees in India as well. And I think being digital and remote first has allowed us to basically leverage talent from other countries where we know there's like kind of like a lack of those specific talents in Indonesia or Southeast Asia. So a really good example, I think in India, there's about more than 4 million engineers that graduate every year, versus, as you probably are aware, in Indonesia, still less than 4,000 a year computer scientists graduate, right? So digitalization has allowed us to be able to be very global in the way we think. And that has allowed us to actually become more diverse in the way we actually create product or build product in the company, and serving primarily Indonesian market. So I think that of course is quite clearly beneficial. Now, I think on terms of the upskilling, the research is very interesting. As you correctly mentioned, technology tends to kind of exclude women. Very rarely do we see women in the fintech or technology spaces. Even in India right now, amongst our technology teams, it is much rarer to find women, wanting to work in the computer science fintech space. However, I think what we are trying to do, especially as a women founder myself, is I think trying to be more involved in women for tech initiatives in different countries, and trying to be more mindful when we hire, and giving KPI as well for HR to actually have diversity as top of mind, when we hire for specific roles, especially in the technical field. And then being very open to upskilling. So, I think with remote work being possible, we also see it's much easier to actually learn technological skills online. So, you no longer need to be living in a city. You can be living in remote parts of Indonesia or India, and at the same time learn, how to code, how to do simple stuff like QA, or, even AI, right? We are currently working with our engineers to upskill existing talent on Copilot, which is basically a tool in GitHub that allows coders to utilize AI to become a lot more productive, significantly more productive. So, these are the things that we're investing in. We also have a program in Pluang that if, anybody wants to upskill themselves, anybody of any level, we actually will cover the cost. So they can choose the course they want to attend, whether it's offline or online. And as long as the upskilling is still relevant to their work, we actually will cover the cost. And I think finally, just on the comment of, having a more of a hybrid work environment, it means, especially in a startup, that we do need to upskill everyone on basic project management, as it becomes even more important to have asynchronous syncing across the different departments and teams that are in different countries. We are currently in 3 different countries, so coordinating even across time zones is challenging. And so, we upskill and train our employees on software tools such as Jira. So we currently use Jira across all departments in our company. And we train everyone, not just in the technology departments, but also even back office departments such as HR or finance, etc., on this tool, right? And so I think everyone is required as a result to learn the basic principles of Agile in the company. And we think that it will benefit them actually when they actually join other tech companies. And it allows them to actually be able to, become faster when they make decisions and be more independent as well as be better when it comes to asynchronous project management, which is a skill set that frankly a lot of companies don't have coming into COVID. So meaning allowing people to be more self-reliant and supporting them and creating more transparency in their work, even when they're working from home. So that's a little bit from me. Yeah, thank you so much.
Thank you, Ms. Colonas. Very enlightening, and also this idea of, for sure, when you do upskilling, you also change a bit the work, the way in which people work. So you need to also train them to different, to sort of be up to different profiles. And I think this is a good segue. Now we are turning to Dr. Jens Tau. Dr. Jens Tau has been the Deputy General Manager of the Private Banking Employees Association, AGB Banken, since July 2022. Is the chairman of the Banking Committee for European Social Affairs of the European Banking Federation and the honorary judge in the 9th Senate of the Federal Labor Court in Germany. Dr. Tau joined AGB Banking in 1999, and he was a general counsel then, and has been managing director for legal European and international affairs since 2007. And before that, he completed his law studies in Berlin, and he worked for an international law firm in Berlin. So Dr. Tau comes from an employees organization perspective, from a European perspective. And so my question to Dr. Tau is about maybe looking at some of the findings that were mentioned by Bhavana around increased productivity, increased innovation, but also improved business outcome, and something also actually was mentioned by or hinted by Ms. Colonas. But the research also look at some of the flip side, like concern including, for example, availability of talent, balancing the business goal of a financial sector organization with the well-being of employees. So maybe looking at the European landscape and looking also at the employees organization role, could you tell us what AGB Banken has done, how it has worked or is working to support its member in the creation of an enabling environment that promote digitalization and at the same time address issues around employee well-being and in general decent work outcome, and also some of the measures that have been taken by your organization. Dr. Tau, you have 5 minutes, and please, the floor is yours.
Yes, thank you very much, Margarita. And also thank you very much for the study that you have just shown. I think it is really very important that we continue to monitor what is going on, because digitalization as such, of course, in the banking sector is as old as computers are. And we have been doing progress in this area really already since the mid 40s, if you so like. But so this is more a continuous topic to us, much less than something like a project or so. I think, with respect also what we heard this morning, that the two key enablers from our point of view are, of course, continuous training and also involvement of social partners. All the studies have shown that the transition is far easier when social partners are involved, and the acceptance of the necessary changes are simply boosted by appropriate social partner involvement. At least this is true for the European vision of these things. And I think, of course, from an employer social partner, we, of course, invite sector unions and local works councils to find collective rules on the basis of those that are already in place, like the ILO joint recommendations that we have all together released in January 2022. But this does not stand alone. I mean, it's supplemented over the world, and looking from a European perspective, by various European joint declarations, for example, on telework, on digitalization, also on remote work. In Europe, we have made in the banking sector joint declarations on COVID-19 and the impact and the issues that we faced at that time, and also how digitalization affects employees in their role as providing financial services. All this is governed by joint social partners' perspective, and I think they are certainly can be used as an idea of joint social partners' position, where people can relate to. And if no social partners are available, of course, employers and employee representatives are able to refer to these documents and kind of a state-of-the-art employment relationship to be a sound basis for that. From our perspective, we also feel that digitalization, especially in combination with remote work and the current hybrid working model that we have at the European level, has allowed a new level of employee flexibility. And this flexibility is really jointly defined by employee and employers. And given the situation in the banking industry, we have to really see that the idea of getting skilled people to work with us, which of course is a fierce competition with respect to other sectors. These flexibilities really are also opportunities with respect to employer branding and also to sector branding, to be honest. Because we have to keep in mind that in the banking sector, we generally have high skilled employees, and of course they make a responsible use of these opportunities. Social partners on the European level have long used a holistic approach to this topic, and we have also introduced this holistic approach into our own joint declaration on digitalization, where we see that it is really necessary to be addressing and assessing the employment effects of those technology-induced developments that are foreseeable. But we have to be, also conscious of the human mind, because the human mind is not particularly good at discovering or finding a relation to exponential developments, which is what we have in the digitalized world. It's not a linear world anymore, and we are by now reaching the second half of the chessboard, if you so like, where the exponential development really picks up speed, for example, but not only, as we can see with the new issues that we are facing with respect to AI. And maybe with this, in order not to take my time too long, let me maybe refer to you also not only to this very, very good study that we have just heard about, but also to the website of AGB Banken, where we made a 2023 representative study asking more than 800 employees from all levels of hierarchy, you know, how they are affected by the current use of digitalization. And I think what you will find there, and you can make up your own conclusions out of this, is that generally the way that banks handle in this social partner environment the challenges that come along with digitalization are best addressed in a hybrid working model, and people feel very, very comfortable in this at the moment, not making the issues that we have to address smaller. There are issues, of course, but with a willingness of all sides, we have found really good solutions, and people are usually very, very more than 85% of the employees are really, really happy with this new flexibility, allowing them to reconcile private life and working life in a way unprecedented. And maybe with this I close for the moment, but of course open to question whenever you like.
Thank you very much, Dr. Tao. And actually, I like this perspective of the European perspective. For sure, we know is very different from what is happening in Asia. There are also other dynamics there in terms of leapfrogging and so on. But I also like something also similar message from the trade union speaker about, you know, we need to continue to negotiate. We need to continue to talk about what are some of the challenges, but also opportunity, and also start to ask questions. What are the best way to work in a digital environment, particularly in the financial sector? Let me now just have a last round. The last round should be a very quick round where I'm going to ask each of the speakers. I will start with Mr. Kansel. Just Mr. Kansel, 3 takeaways, very short, that you think can inform future action in your organization. You mentioned some of the challenges still ahead, but what are some takeaways that we can take home and maybe work as ILO, or we can work as you can work as a union, and so on. So please, the floor is yours. You have also 5 minutes. If you can do less, that is still good.
Thank you, Marita. I can say overall, unions believe the impact of digitalization on the bank compliance in India is a mixed. We have the private banks also, we have the public sector banks also. I particularly represent public sector banks, and our unions are also there in public sector banks. The problems are less in the public sector banks. The hire and fire is not there. It is there in the private sector banks. But we still feel that after digitalization, while some jobs have been lost, but the new opportunities also have been created. As the banking sector continues to digitize, it is likely that skill requirements for the bank compliance will continue to evolve. We will continue guiding and teaching the members to adopt new technology in a balanced way by learning and welcoming it, and at the same time ensuring being valuable for interpersonal skills. Looking at the pros and cons of the digitalization and AI, it is the responsibility of the unions to negotiate with the employers and policymakers to create strategies that prioritize the welfare and job security of the workers. Unions must proactively engage with these changes, advocating for the rights and well-being of their members. Through collaboration, education, and strategic negotiation, we can navigate these challenges and build a future where technology and workers coexist harmoniously. Then second thing is, we feel youth in the banking industry up to the age of 35, they constitute 60% of the total workforce. Similarly, women constitute in India 25% of the workforce. We definitely believe and have a faith they are the future leaders. Unions should involve them in their activities by giving them opportunities for leadership roles, and should give some key positions also to them. We as a responsible union, we keep grooming these youngsters, telling them about our past struggles and achievements to instill a sense of pride and belongingness. With a strong trust in the unions, we feel this will lead to a better bargaining power. Some of the in-book affiliated unions have already taken the lead in this regard. A women wing of the unions have been constituted recently by holding a conference of female officers in its one unit. Leadership role is given to 2 women in each of the 20 zones across the country. They have been entrusted with the task of engaging with their fellow women colleagues, and they should coordinate for resolving their issues. Even 50% of the key positions are given to youngsters up to the age of 35. We feel unions to extend such activities in all affiliates, and we will do it. Since this force of youngsters is a tech-savvy, they can better motivate others to adapt to the new digital tools. The third thing is, we have a philosophy: grow with the bank. Unions not only fight, they are not only for taking fights with the managements. We feel grow with the bank. If the institution grows, then only the unions will grow. Then only the future of the members are there. So we believe that unions, in collaboration with the managements, can play a larger role in growth of the banks by keeping a balance between rise of technology and simultaneously protecting the rights of the workers by giving them better workplace with less stress and without deterioration in their work-life balance. I know the challenges faced by the unions are significant, but I'm confident that unions will continue to play an important role in ensuring that workers have a fair and just future. Unions are essential for protecting the rights and interests of the workers in the face of technological change. Unions remain an important voice for the workers. Unions fight for their better wages, better working conditions, and they provide support and representation to workers when they need it most. I feel we must all support unions in their fight for a fair and just efforts to protect the rights of the workers, and simultaneously in their role to motivate workers to put their might in business growth of the financial institution in tune with their philosophy, grow with the bank. The last thing is I can say, just one minute only. We as a responsible trade union, in order to promote digitalization in our cadres, we feel that further enhance and making use of the technology to strengthen themselves to keep in contact with the members using the digital tools, which help them to communicate with their cadres at a much faster pace. So we are using all types of digital tools, whether it is website, whether it is app, whether it is mail merger, Facebook, every social media platform, we make use to keep a contact with the members. And that helps us help the members to put forth their problems more quickly to us. Thank you. Thank you, Margareta.
Thank you very much, Mr. Cancel. Now let me turn to Ms. Colonas. So just 3 takeaways, Ms. Colonas.
Yes, thank you so much. So number one, embracing, obviously as a startup in the fintech sector, embracing digitalization is really important. And source of digital talents, as mentioned earlier, is a must for us. So, being able to embrace the remote working conditions so that we are able to hire from other places around the world, right? That allows for inclusion of a workforce that previously was more focused on city-like areas. So this means that, we have seen hiring now happen for workers that live in non-city areas, rural areas, who are able to upskill themselves despite not being able to access cities. Number two would be the real importance of upskilling. And we see the very fast pace of AI as something that is quite apparent in our industry specifically, right? If I think even just in the past year, the speed that AI has actually disrupted and begun to disrupt our industry is moving at a faster rate than we would initially even expect as founders. And now the question is, how do we ensure that our workers and our teams are continuously upskilled to be able to benefit from that disruption instead of seeing it as a negative? So that's something that we're doing, continuing to commit as companies to actually set aside budget for providing workers free access to education and upskilling in these specific sectors. And that brings me to the next point of basically, having diverse and inclusive workspace. As you mentioned earlier in your research, two very specific sectors that we personally like to focus on is women, number one, and number two, people with less than 3 years work experience, right? Because actually, we have found, especially in startups, right, well, experience does really matter. There is actually also a use for fresh graduates who are hungry to learn, and willing to actually learn a lot of skills very quickly, as having a very big advantage in certain departments in our company. So that's kind of like the large and high level. So hopefully that's clear. And hopefully, I think, and one last thing to say, thank you very much for having us, especially as a startup. While we're very young and therefore we haven't, as a company, and therefore we haven't had a lot of involvement in trade unions and labor unions, I think what's really important is that we continue in these dialogues. We're very open and being very open to unions and the requests of our team members, as human capital is very important for technology companies, and continuing to evolve ourselves to be included and to be inclusive as well.
Thank you, Claudia. I can see also some of the point around women and young people that actually reflect Mr. Council. Before giving the floor to Dr. Tao, just I want to remind the audience that to use the Q&A function to ask a question to the panelists. And soon after Dr. Tao, I will also give a very, very short moment to Bhavana to react to the intervention. So Dr. Tao, you have the floor for the 3 takeaways.
Thank you very much, Margarita. And if I were to name 3 takeaways, I would say 1, skilling and social partnership; 2, shared OSHA responsibility, very important; and 3, no dividing between groups of employees. And let me put 1 sentence behind each one of these 3. I think skilling and social partnership really remains a key driver for change and also for the acceptance of change. The trusted relations really do form the best basis for change and its long-term success, because having AI coming at the doorsteps, we have to intensify the collaboration in order to make this acceptable, also in light of the regulation, for at least that is coming to us in Europe. The shared OSHA responsibility is a very important point, because when people start working flexible, the employer has limited opportunities to ensure that health and safety at the workplace, which can be in a train, which can be at home or wherever, is kept. So employees have to take up responsibility for this in an unprecedented way as well. And this, of course, requires skilling, again, by the employer, of course, during the working time. And it is very important that employees do accept this self-responsibility in order to stay fit and deployable in what the sector is doing at the moment. And point number 3, really for me as employer, is very important not to divide employee along the flexible or non-flexible or fixed or variable place of work. regardless of the differences that each of these groups of work do bring, we have the feeling that it is very, very important to keep them as one group and keep them together and not make some kind of marking of which is better or which is not such a good way of working, because many times regulation requires that work is not done mobile, but done in the office where, for example, advice is recorded and all these kinds of things where you simply cannot sit at home or in a train. So what we want to have an inclusive workforce in this respect as well, and that this, of course, is also true to and keeps in mind the special needs of various group of people, which are, of course, not alone women and men. By the way, you know maybe that in Europe, women are the predominant part in the workforce of banks, and so by definition, their needs are, of course, catered for. But it also means that some kind of handicaps, also physical and also mental stress, is addressed in a certain way, very, very different from what we had 2 or 3 years ago. And this, I would say, are the 3 takeaways that I would say.
Thank you, Dr. Tao. I like naturally this idea not to create, let me say, a two-tier system of workers, and this goes away with also equality in the conditions. Let me maybe give the floor to Bhavana. Bhavana, if you want to react to some of these takeaways, but also some of the intervention of the speakers, not much time, maybe we want to give the floor to question too, but if you want to react, I can give you the floor.
Thanks, Margarita. I mean, thank you. I think it was very interesting to hear the perspectives from the 3 speakers, and I think it very appropriately tied into some of the findings that we had from the study. But if you ask me in terms of the takeaways that I would like to sort of end with is, I think there could not be a much more, relevant time than this for more improved collaboration between the 3 sets of stakeholders. If we are to achieve all that we're talking about, the digitalization and the impact it is having on the employees and the organizations at a larger level, I think there is a need for the institutions, the financial institutions, the employees' organizations, and the trade unions to come together, work more cohesively on some of the issues that we have identified in this survey or in this study, and take it forward. Whether we talk about inclusivity, we talk about engaging women or not leaving them out intentionally or unintentionally, or we're talking about things around skilling and training and building the capacities of the workforce, the current workforce. So irrespective of the issues that we have spoken about, I think there is a greater need for collaboration for these 3 sets of stakeholders to make, to make a much more positive impact of digitalization. So with this, I would just want to end here and then give the floor to you, because we know we're running out of time.
Thank you, Bhavana. I think this is great. I just see here it's more an observation from one of the person in the audience, and maybe you can react to that, but you already have been hinting at that. The idea that if we don't intentionally include women in technology, then we will be unintentionally excluding them, and that I think it's linked also to an observation that I have, and maybe can be part of the question. Some of the measure around, for example, women or education or even young people would require also a sort of regulatory environment from the government, right? You need also government policy that can support your work to ensure inclusivity, to ensure gender responsive policy for the workforce, and to ensure skills and so on. So maybe the first reacting to this observation about the unintentional exclusion of women, but also maybe provoking the discussion, what would you want if you want to ask something to the government? The government is not here in this webinar, but what would expect the government to do to sort of pursue and make your work easier? question for everybody. So the people that want to reply.
If I may start, maybe that for thinking that governments really would have to be responsible for a social partner-friendly environment, I think this is a crucial issue, and this also requires more than neutrality. It requires to really support social partners from both sides. It is due to the fragmentation of society in general, that collective organizations, and they include employers and employee organizations, have a very hard time to organize people from whatever side of the table to value the collective part of the employment relationship. And I think, at least with respect to Europe, I of course cannot speak for the whole world, but for Europe, I can say that the struggle both sides of the negotiation table have since 10 or 15 years is really substantial. And if we want to keep this level of engagement, this level also of acceptance, it is very important that governments start supporting where not created the creation of social partners, and where created the support for them, that they can really speak for their respective sector and find solutions that are typical and specific to this need. Thank you.
Thank you. Any other reaction?
I'll tell you. In India also, our government has already come out with a policy, DEI policy, diversity, inclusion, and equality. So these things, recently the bank managements called the unions also to have the discussions on this policy, where the more privilege will be given to the women and the persons who need the requirement. And in their placement, for women in their placement, in their promotions, in their needs to take care of their children, so many things are coming. So government has already come out with a policy, and it is already available in the banks in the India.
Thank you. Claudia.
Yeah, just one thing. I think coming from the private sector, I think subsidies for training, right? Currently, obviously in Pulang, as mentioned, we do cover everything 100%. But of course, that if upskilling, I can also imagine from companies that may have limited budget, right? If the government can work together with the private sector to actually subsidize some of these upskilling required for machine learning and AI training, I think that would be very helpful in general.
Thank you. There is a small question from the floor. I think maybe it's for Bhavana. It's about the coverage of the study. Bhavana, the person from the audience is asking if the research covers a frontline service provider like the business correspondent SAKIs, because they're not employee of financial service providers and they operate more in the rural community. If you want, you can reply directly.
Yeah, thanks, Margarita. So, I mean, so while we acknowledge that VC Sakhis are like the front end team of the FSPs in India, particularly, we did not directly cover the VC Sakhis per se as an entity, but as an extended arm of FSPs, the questions that we designed were intended to seek their answers on not just what they're doing for the employees, but also what systems or policies or practices they have put in place with respect to the agents on the field. And VC Sakhis are in all practical purposes and agents of FSP. So from that point of view, yes, it to some extent it covers, but not directly interacting with them. Thank you.
Yes, no, thank you. Thank you, Bhavana. I don't know, maybe there is maybe another question just to elaborate more on one observation you had around in the research, right? You mentioned the fact that the condition of work have changed, but the enabling provision around the new or the emergence condition of work have not found their way into the employee contracts. And maybe if one of the speakers has some reaction to that, what will be the reason? Do you think maybe it's the role of social dialogue also to make sure that the type of a contractual arrangement adapted to the new reality? Or maybe it's a question also of, again, the institutional environment, maybe brand new financial sector provider like Pluang may not have this problem because they come from a very different perspective, so they don't have to make that transition. So if you want to react to that, like, do you think it's a question of dialogue between the partners, or is a question of models? The floor is yours. I give you the floor to whoever wants to react.
If you want to hear my opinion on with respect to social dialogue, I think this will become an issue really of employer branding, at least in our part of the world, because I cannot imagine that people from a human perspective choose to go to an environment where the security of the employment relationship and also the value of social dialogue that this really give the edge also in the market for talent and in the search for talent, which of course is in Germany, in Europe generally, very difficult at the moment because we have a demography where a lot of people are leaving the employment relationship to go to pension in the next 10 years. And it is very, very difficult without the uprising of AI to really substitute those that are going into pension. So this also plays a very important role.
Thank you. I don't see any other question, and first of all, a round of applause to the speakers for their contribution, but also for their reflection to the funding of the research, and naturally to Bhavana that has worked on the research together with her team. Thank you very much for this. Before giving the floor for closing remark to Valerie Breda, my colleague from the social finance program, I would like to mention that we have a very small evaluation form. We are going to share it with you in the chat. Yes, Valerie just did that. And please feel free also to give your opinion to what you heard and to the session and the way in which the webinar was organized. And I thank you very much. And now I give the floor to Valerie Breda.
Thank you, Margherita, and thank you very much to all the participants for being with us for the past 90 minutes, but also a great thanks to our great speakers today. First, thanks to Bhavana and her research team with whom we have been working for the past maybe 3 to 4 months. It has been a long journey together, but we are very happy that it has provided great insight actually on the trends when it comes to digitization in the financial sector, and also when it comes to the gaps, and also some of the good practices that financial service providers, trade unions and employers associations in the sector have taken to ensure decent work outcomes. I think we have kind of identified that social dialogue is key in this on that topic, and I think I would encourage this this topic to continue actually, but I think we have also heard a lot about training, about ensuring that that the sector has a diverse workforce. So quite a good attention, or a big attention on the importance of training, upskilling women and integrating them in the workforce. So maybe just a few information about the next steps on this this research. So we took note of the comments and contributions by our great speakers today, Ms. Colonna, Dr. To, and Mr. Kamsal. That was very fruitful, and I really thank you for your time and your efforts in being with us today, but also in providing inputs before. And we will then finalize this this study, and we hope the publication can be ready maybe in the next quarter or first quarter of 2024. So it has been a great journey together, and I think it's also only the beginning, as we hope the recommendations can be taken up by all the actors in the financial sector worldwide to ensure decent work is guaranteed. So thank you very much, and please fill the evaluation form again, and we hope to see you again in the future. Thank you also, Margherita, for the great moderation. Thank you all.
Thank you all.
Thank you. Thank you all.
Thank
Thank you
you.
so much.
Thank you. Thank you. Thank you.
Much.
Thank you, and have a nice evening.
Special
Thank you.
relationship. They've been great.